Futures trading higher this morning after a big sell-off yesterday. We are looking at a bit of a rebound from that sell-off. Dow Industrial's up 156, the S&P up 9.25. The Nasdaq is extending the losses of yesterday, down another 32 points right now. Bond yields, meanwhile, are stabilizing, pushing the 10-year Treasury yield back above 1.3%. Yesterday, that yield dropped to 1.28%. Joining me right now is Lebenthal Global Advisors President Dominick Tavella. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell and the Wall Street Journal Assistant Editorial Page Editor James Freeman. Great to see everybody this morning. Thank you so much for being here. Dominick, what's your take on what's been happening in these markets? We're seeing a little stabilization of the bond market this morning, but we had yields so low yesterday, triggering that sell-off in the stock market. Are you worried about second half growth?
Not really, Maria. Look, we had that announcement coming out of Japan about closing the Olympics to spectators, and that really spooked the market. So we went from the futures being flat the prior night to 3, 4 o'clock in the morning when the announcement came out. The futures literally dropped 500 points. So there is some fear out there. We're starting to get some fear that this Delta variant might slow down the growth in the economy, certainly on a global scale, not just here in the U.S. We're very much vaccinated here and making progress every day, but the rest of the world not quite as far as we are. So there is some concern out there. But no, honestly, Maria, no, I'm not. I think this momentum continues, and we're going to have a terrific third and fourth quarter.
All right, so we had news yesterday about Wells Fargo shuttering all personal lines of credit to customers. It's going to shut down existing ones in the coming weeks. What's your take on what Wells Fargo is doing? And, of course, we should point out that this coming ahead of bank earnings next week. I want to get your take on the Wells news and what you're expecting from the bank earnings, which are going to be beginning next week. J.P. Morgan and Wells will report. The stock right now of Wells down 2.5%, Dominick.
Yeah, so that was really disappointing news, Maria. You know, Wells Fargo is really tied to the consumer in this country. It really is one of the more down-to-earth banks, very local, very regional in terms of having access to the average person out there. And cutting off this kind of available credit really limits these people's ability, whether it's to do home improvements, whether it's the ability to buy a car, or even start a business. So this may be tied to, you know, the Federal Reserve restricting how much they can grow their balance sheet. There was a similar move about a year ago. They limited home equity loans and lines of credit. They limited the amount of car loans that they were able to do. So it could be part of the strategy because the Fed won't let them grow their balance sheet. But it's really disappointing at the consumer level. It's really bad news.
But do you think that this indicates any further weakness in the Wells business?
No. Again, the amount of, just in general, we've seen a tremendous amount of debt consumers taken on the last 2 months, as a matter of fact. They're really on a spending spree, consumers are. They're really borrowing heavily. I think this is really particularly tied to Wells Fargo business, and they're trying to limit their exposure and where they can grow their business line. So this may not be a particularly profitable sector of their business, and they're trying to divert their monies and resources elsewhere. But I really think it's because the Fed's not allowing them to grow their balance sheet. So they need to focus where they can get the most amount of money, where they can make the most amount of money. So I think it's a Wells issue. I don't think it's an industry issue.
Right. No, I know it's a Wells issue. I just wondered if it's a Wells issue about a weakening business. The stock is actually bouncing right now. It's up now 1% in the pre-market. But, Dominick, we are right now on the doorstep of second quarter earnings. They begin next week with the banks reporting. What are you expecting from the quarter? Most of the people who I spoke with yesterday said that it's really not a second quarter earnings worry in the market right now, but more about the second half of the year worry that growth estimates are way too high. What do you think in terms of second quarter earnings next week? What's priced into the market?
Look, Maria, I think you hit the nail on the head on that one. I think you're exactly right. Year over year, it's kind of an easy comparison, right? We were in the middle of COVID 12 months ago, so it's kind of an easy comparison. The question going forward are twofold. Interest rates this low, it's really hard for these banks to make money. Loan origination is really terrible terrible. Mortgage demand is pretty low. Credit businesses asking for money. Credit demand is really low. So the only place these banks can make money, you think of the Goldman, you think of J.P. Morgan Chase, is in trading, mergers and acquisitions. So Wells and banks like that are going to have a little bit of a problem going forward. So short term, we've actually trimmed our position in banks. I was a big fan. I've been on the show many times with you, Maria. I'm a big fan of the sector. We've recently trimmed our position over the last couple of weeks. We may come back into the space later in the year, but I think this is a good time. If you've had a good year in the sector, maybe take some money off the table.
All right. In terms of the overall earnings season, what's your take and what we'll hear? I wonder if we're going to hear guidance from these companies, the S&P 500, ahead of the second half. That's what people want to know about. What's your take and how are you allocating capital right now, Dominick?
So again, exactly right, Maria. We have high expectations for earnings. We still think the S&P is very reasonably within $200. And when I was starting to hear whisper that number could go to $225, maybe as high as $250 next year. So overall, I think the numbers are going to be spectacular. Just a little bit less spectacular than last quarter. On the average, companies were increasing earnings 60, 70, 80% over what analysts had thought. I think that number comes down a little bit, but I think it's still going to be spectacular. But the level of growth, the range at how quickly that number augments, I think is going to start to flatten out a little bit later in the year. I still think the economy has a terrific third and fourth quarter. In terms of allocation, seasonality, we're going through a very difficult time. Normally, markets take a breather here. It would not be unusual. We've had 6 pullbacks in the last 12 months. They average somewhere between 5 and 7%. So that should not scare anybody at all. That should be planned, and you use that as a buying opportunity.
All right, Dominick, we will be watching. Good to see you this morning. Thank you so much. We'll talk soon.
Thank you, Maria.
Dominick Tavella joining us this morning from Lebenthal.